10 major retailers that might be closing their doors in 2023. As the recession looms on the horizon, many beloved retail stores are facing the grim possibility of closing their doors forever. From major brands like Tuesday Morning and Bed Bath & Beyond to smaller establishments, no one is safe. The inability to modernize and adapt to today's consumers' shifting purchasing patterns and the dominance of Amazon have all contributed to the downfall of some U.S. retail chains in recent years. But now that 2023 is here, the threat of store closings hangs heavy in the air. Don't be caught off guard. Join us as we take a look at the retail stores that may not make it through the coming year. Brace yourself for the doom and gloom that lies ahead. This video will show you 10 significant retailers that might be closing their doors in 2023. Let's get right into it and start with the first major retailer that we might have to say goodbye to forever. The following chains will either close all of their locations or many of them in 2023. 1. Bed Bath & Beyond. According to USA Today, the home shop stated in September that it would close around 150 locations and lay off 20% of its staff to save $250 million this fiscal year. The business secured $500 million in additional financing and said it would shift its emphasis from selling its home brands to national ones. Before the new plan, Bed Bath & Beyond's second quarter report was disastrous. It showed $1.44 billion in revenues, but a $366 million net loss. The same store sales decreased by 26%, according to a CNBC story from September. The company has several problems to solve, including debt, a tight relationship with vendors, a lack of permanent corporate leadership, and other challenges. According to Neil Saunders, managing director at Global Data Retail, Bed Bath & Beyond needs to collaborate with these suppliers to stock the shelves with distinctive goods that will make the shop a destination if it wants to thrive. Bed Bath & Beyond will need help to differentiate itself and see margin compression as a result of having to compete on price if it merely stocks the same kinds of products bought at Target, Walmart, or Amazon, he claimed. Join the Economic Empires community and stay informed. You'll get the latest updates on store closures and the challenges facing these businesses. Don't miss out. Hit that subscribe button now. Now, let's continue. 2. Joann. When people hunkered down at home and discovered opportunities to complete projects during the epidemic, Joann, a large retailer of goods for sewing materials and arts and crafts, benefited. But it needs help. The coronavirus epidemic in 2020 and 2021 compelled shops to alter their business practices completely. As California continues to recover, changes in consumer purchasing patterns brought on by inflation have hampered long-established brick-and-mortar retail establishments. Chains may face a challenging year with new obstacles as the recession threatens the Golden State. According to analysts, months of inflation have driven up operational costs at retail locations and decreased sales at mid-tier merchants. UBS analysts forecast a wave of closures for department shops and major retailers in 2023, even for businesses that managed to survive the pandemic. It was predicted in mid-December 2022. Since luxury companies and off-price retailers directly compete with department stores, these developments are probably alarming for department stores. 3. Kroger. The retail apocalypse, which devastated the retail sector from 2017 to 2020, barely spared grocery retailers. In 2021 and 2022, Kroger closed several sites and will do so again in 2023. According to Best Life, Lori Rea, president of Kroger's Mid-Atlantic division, stated following the closure of a store that first opened in 1979, "Closing a store is a tough decision and one that we take very seriously. Due to this store's poor financial performance, we could not maintain our low price commitment to our customers." 4. Best Buy. Every year, this struggling electronics retailer quietly shutters more locations. The chain closed 20 sites in 2019 and another 20 in 2020. due to the coronavirus epidemic, which caused a wave of store closings across the country. The chain declared intentions to close a bigger number this year. The total number of outlets operated by the corporation is kept a secret. Media estimates show at least 60 Best Buy locations closed in 2021. California currently only has 145 Best Buy locations. The Best Buy store at the Crossroads Shopping Mall in Riverbank, California, permanently closed in September. Best Buy officials saw business slow down in March 2022. Best Buy CEO Corey Berry made the following prediction in a 2022 BizJournals.com article. Supply chain concerns, workforce shortages, and ongoing COVID-19 outbreaks internationally might lead to unanticipated factory shutdowns that could ripple through the markets, she warned. 5. Northgate Gonzalez Market. The Orange County Register reported that this well-known Mexican grocery chain from California shut down 2 of its locations in Santa Ana. Many traditional retailers are forced to close some or all of their locations as they struggle to compete with online retailers and the pandemic. Also, substantial national chains are being impacted, not simply little mom-and-pop stores. Here we look at the companies that have either closed their doors or have plans to do so in 2023. The change has influenced nearly every industry and consumer behavior in the pandemic, including restaurants, electronics, apparel, and home goods. 6. JCPenney. In addition to closing more than 150 stores last year, JCPenney will close other stores this spring. The network of shops announced in December that it would close 15 more locations at the end of March 2023. In a statement to USA Today, JCPenney said, "We have decided to close 15 stores as part of our retail optimization strategy, which began in June with our financial restructuring. These shops will start having liquidation discounts later this month and close to customers in mid or late March." 7. Francesca's. By the end of 2022, Francesca's closed about 140 outlets as the company announced in November. In December, the chain of women's boutiques also filed for Chapter 11 bankruptcy to sell the whole company, including its physical locations. According to USA Today, approximately 558 of the business's stores are still open. Still, the company plans to attempt to renegotiate several leases during this process, which may include closing other boutiques, according to a statement to USA Today. 8. GameStop. GameStop is preparing for even more store closures in 2023 after closing hundreds during the previous 2 years. The retailer of video games announced intentions to close more than 1,000 locations by the end of its fiscal year in March and December. The closures come after almost 10 years of financial difficulties for the gaming juggernaut, attempting to pay off its debts following a $458 million net loss in 2018. 9. Sears. The parent firm Transform Cost, Sears, which filed for bankruptcy in 2018 and shuttered the bulk of its stores during the previous 2 years, is still seeing a severe decrease in sales. The troubled chain, according to CNN, is amid a slow-motion liquidation and will continue closing stores where feasible over the following years, in addition to additional advertising locations with commercial real estate brokers. 10. JCPenney. Another department store is also in danger of closing. The company has been struggling for years and filed for bankruptcy in 2020. It has since closed a number of locations, but with the added pressure of the recession, it's uncertain if it will be able to stay open in 2023. These are the 10 major retailers that might be closing their doors in 2023. It's a grim outlook for these beloved stores, but it's important to stay informed about the state of the retail industry. Make sure to like and subscribe to our channel for more updates on the latest updates in the world of retail.